Welcome back. You're watching Power Breakfast on CNBC-TV18. Well, back home on the Lal Street, the markets failed to hold on to the recovery and fell sharply in the second half on Monday. The Nifty gave up the 10,700 mark, while the Sensex fell more than 250 points. The mid-caps and the bank stocks were hit worse, with the mid-caps losing 117 points and the financials contributing to more than 50% of the Nifty fall. But that was about Monday. We had more cues coming over the holiday on Tuesday, and today, Manglam, it looks like it's going to be a bit of tepid start for our own markets given the global rout.
Absolutely. A tepid start, 25 points in the green. That is still something that the bulls will take with both hands, given the rout that we've seen on Wall Street. You know, just for perspective, the worst Christmas Eve ever on Wall Street, a 650-point rout on Dow Jones. And remember, all of last week, we saw about a 1,700-point rout on Dow Jones. So add to that, we're down about 13-14% for this month just for the mother market. And S&P 500 too has closed in the bear territory. It is Trump's triple trouble, if you must. You know, the standoff between the US president and the Fed chair. That is one of the reasons. The second reason, the US government shut down over border wall. And then there are high-profile exits, the last one being the resignation of the defense secretary. All of that really souring sentiment. Add to that, you have, fear that maybe the economic slowdown will come in once the interest rates are risen with the ferocity that Trump believes that Jerome Powell is rising them. Nikkei, we spoke about that at the start of the show when we were talking about Asian markets. It was shut for trade on Monday, and there was some impending fall to be witnessed given the 450-point decline that we saw on the Dow. Yesterday, it was down 5% because we had seen a 1,000-point Dow fall preceding yesterday's opening on the Nikkei, and it was the only major index which was opened. And today, it is attempting a bit of a recovery, up about 1.25%. Add to that, we have the SGX Nifty, which is around 20-25 points positive. Why is that? Perhaps could be one, because 320 points there was a 320-point decline in just the last 4 trading sessions. We're still outperforming the world. We have our own reasons for that. The Nifty is down 2% this month. Majority of those cuts coming by in just the last 4 trading sessions. This compares with the Dow Jones, Nikkei losing about 13%. The FTSE and the Hang Seng too down about 3.5–4%. In fact, we have outperformed all the other major indices in the world. And this is the biggest reason. Brent, now it's around $50 per barrel. It's 42% from recent high of $86 per barrel. So that's a big positive, because Brent falls, the demand for dollar falls, rupee strengthens, your financials improve, as well as the bond yields, they improve. That causes a pretty decent sentiment as far as markets are concerned. The FII flows on Friday, while on a net level, we saw a 600 crore worth sale. The important point was volumes are thinning, and they would be thinning all through the course of this week, which is also the expiry week. So the FII gross volumes were just around 2,000 crores, including the buy and sell average. So that is pretty lower than what we see usually, which is 4,500 to 5,000 crores itself. So let's talk about the index options then. 1,600 crore worth purchase, 1,700 crore worth purchase, where FII sought protection on the downside. And if we were to fall, as all the other markets are falling, we have a fair amount of protection. 2 long puts per long call have been initiated by the FIIs all through the course of this series. So important levels to watch out for. On the upside, a level that we can perhaps kiss goodbye this series would be the 200-day moving average, 10,768. The 50-day moving average would be our first port of support at the lower levels, 10,580. And if at all we were to break that, then the series low of 10,334, the one that happened on the day election results were, or the day we got the news that, the RBI governor had resigned. We made a low out there that could perhaps hold.
Oh, well, yes. So SGX Nifty suggesting a cut of around 30 points when you adjust it for the futures. Nikkei is off the high point of the day. And if you look at Dow futures, for what it's worth, it's trading in the red territory. So no respite coming in from the global cues. So Manglam, a lot of macro and global cues that we'll track. But in terms of stock-specific action, what are we looking at?
Stock-specific action, Anisha, not too many, to be very honest. The first group of stocks that we'll be looking at most definitely will be the oil sensitives. So oil sensitives are the ones we will be watching out for. But this is interesting because, on Monday's trading session, when we saw a decline in crude prices, we did not see a decline come by in the oil marketing companies. In fact, oil marketing companies were the biggest losers on the Nifty on Monday's trading session. So let's see how they react in today's trading session. But crude sensitives are the ones which, the street believes there is more positivity on. There you have it. Watch out for the paint stocks, watch out for the aviation stocks. So those those are a couple of stocks that we'll be watching out for. Metal stocks, they've taken it on the chin over the last few trading sessions. In fact, on Monday's trading session too, we saw about a 5% decline on the likes of JSW Steel as well as JSPL. So let's see how metal stocks fare in today's trading session. Financials are something that we'll be watching out for. And finally, Hindustan Unilever, there is the news that the company has been slapped with around a 535 crore worth fine by the National Anti-Profiteering Authority, and this is with regards to profiteering with post the GST rate cut has come by. That is what the NAA says. However, Hindustan Unilever has said that they have proactively deposited 160 crores with the NAA with regards to the anti-profiteering allegations, or the company went ahead and proactively deposited that. And secondly, they might not have cut the rates, but they passed on the benefits to consumers via price cuts or increase in grammage. So let's see what happens with regards to this case, but won't be a big sentiment sell-off. No reason for investors to perhaps get out of the stock just because it's a 500 crore rupee fine. But let's see where it goes. It is still a developing story.
Okay, so we'll watch out for HUL and all the other stocks. Thanks, Manglam, for taking us through that list. But on that note, it's time for a quick break on the show. Up next, Finance Minister Jaitley lays out the roadmap for the future of GST. That exclusive conversation when we come back.